Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on March the 12th, 2020 with a daily Forex market analysis and live trading webinar for you. And we just want to pull up our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. This is not any thing to try and get you to do any trades or follow our trades. Now we have examples that are going on. We're showing you how we've worked the trades that we've been on for days and what have you. So these are things that are already in motion. You never try and chase anybody else's trade. So if you're not part of the signal and already triggered and managed when it's going on, then these are things that you are just watching to see how these things unfold. So with that, I want to pull up this real quick. We have some buy and sell signals that our trades were initiated with. They were high probable Japanese candlestick patterns, and ironically there's a book entitled that as well, available on Amazon in paperback and Kindle versions. And with it you can utilize the best buy and sell signals used for over 400 years to give yourself a competitive edge in all markets. Now let's get to the meat and potatoes, what you want here. We're at forex-trading-unlocked.com on the workstation page. We're going to toggle down to our chart. We're going to make this a little bit bigger for our audience. So let's get this centered. There we go. Okay, now you can see the Euro US dollar, as you can see, is pounded new lows. It's very volatile right now. The stock market's been open for an hour and it is swinging all over the place. The Dow right now is down around, 1,800 points. We have this bullish engulfing line sell signal, as you can see, that was triggered a few days ago. The sell signal is definitely in full-blown motion right now. So where is our target? Well, our target is down around this 111 into the 110.90 area, somewhere around here. So we're almost there to hit our initial target. Our extreme target is around 109.85 down in this area. So right now with this volatility, and especially with the new news about Europe being in lockdown from the United States as far as traveling to and from, that's a big deal for Europe for the next 30 days, because it means there's no tourist money, let alone the business money that's coming in. So that's a big thing that they rely on over there, and it is definitely not coming for the next month. So is this going to be a knee-jerk reaction? We shall see, but I would be very careful trying to be a bull in this market. As you can see, we're going to pull up, we are short the euro from 114.21. Obviously the market's at 111.60, so that's a good move. And we have our stop now lowered down to 112.70, which is a little over a full buck above the market right now. And with this volatility, that's the kind of extremes that you have. Our target price is 110 even. So we also have a long Swiss trade at 93.05 with the 93.70 stop in. We've been in this trade for a couple days. So now since it's positive, we've raised that. So both trades here are now winners no matter what, because we have our stops in place. We'll see how low. We're going to ride this trend and see if we can get a little more follow through over the next couple sessions as we wind down the trading week. So let's get back to our chart here. So you can see once again we have the sell signal in the Euro US dollar. We have that one position on. Also we had sold the $1.14 quarter strike price in the binary options back on 310, which was 2 days ago. We sold it for average for the price of 35, short one, as you can see. Now the odds of the market getting back up to 1425, let's see, we'll put a horizontal line. So 1425 is right about there. Okay, so let's correct this coordinate. You can see how fast we do this live. You can do this kind of stuff on our website as well on our charts. So 114.25 right here. This is our option price that we sold. The market's here at 111.59. So unless it rallies all the way back and settles above this tomorrow, this trade here is pretty much locked in and good. Not 100%, but odds are right now this one is pretty good. And the US dollar Swiss trade, we'll go to that one next because this is where we had a buy signal. We had the strike price of greater than 93.25. So 93.25 puts us right here. Let's get this price right for us. So 93.25 gives us this strike price right here. As you can see, the market is above it. It's making new highs, and as long as it doesn't fall back and settle below 93.25 tomorrow, this option, which we bought for 54.50, will be worth 100. Right now it's worth 87.50. So you can see we have about another 13 bucks on this one trade to go. And then we have, let's see, our target price for this market is right around the 95.5 to 96 area, somewhere in this zone here. Once you get above here, there's a heavy resistance, and we'll have to see how that pans out. But right now we have our buy signal, which is a counter trend trade. A lot of this could be due because of what's going on with this European travel ban. We had made a lower move low. We had came back and made a lower move high. We pulled back again. We made a higher move low, and now we're making higher move highs on the intraday basis. So we are in a full-blown correction right now. We are not a bull, but we are in a bullish correction. So the buy signal is in full-blown swing right now and has about another 0.5 point to $1 to go. We've already lifted stops, and with the volatility, we'll see if this really gets pressed on, maybe even through our targets. Because of the travel ban, maybe this might be the beginning of a super dollar bull going on against the European currencies. And here's a reason why I say that. The British pound US dollar has fallen out of bed today. Now, we've had some swings before in this market, but as you can see, it was going sideways. We made a lower move low, came up here, made a higher move high, looked very neutral, but the last few sessions, look at what's happening. And I think now that since the UK is part, even though they're not part of the EU, it's part of the European travel ban, shabam, all of a sudden pound weakness is coming into play. How far is this going to go? Well, that's a good question. Where's the next support level? Well, as you can see, we're pretty much bobbling on it right now. After that, it takes us down to this 122 area. So volatility is increasing in the pound, as you can see how the last 3 days have been versus all these trading days for the past 4 months. So very bearish to European currencies. I think those go with our buy and sell signal in the euro, the Swiss and the euro respectively. So these trades are being fueled by this. Will it end tomorrow or end today? Who knows? We'll see. But right now we're buffering against our target zones. So if you are a bear and you're riding this trade, I think you below 127.26 here, this last swing low pivot, I think that's your directional. Below that, I think the bears are going to be having their fun for a little while yet, and bulls, I think, are going to get slaughtered. Range traders, I'd be very, very careful with these swings that we have going on here. So I think if you're a range trader, trying selling into to highs would be better than trying to buy into lows unless you're taking profit. So just to see what else is going on here, we have another trading signal that we had this week, another bullish engulfing buy signal in the Japanese yen. Look at this volatility. This is absolutely insane. We came off this high, made this spike low a few sessions ago, came all the way back and gave us this bullish engulfing line the other day, and then we fell back yesterday, and then today, look at this, we spiked back, and now here we're riding this little area here. So we do have a US dollar Japanese yen at 104.25 binary option on. So that means that we are looking for the market to settle above 104.25 tomorrow. We can get out of this option right now. It is a plus. We bought it at 56.50. It's at 65.75. Now, because of the volatility, you would think that it would be worth more, but because of this volatility, or it would be, because of where it's at, and we're with the time left, you'd think it'd be worth more, but because of the volatility, it's not where it's at. But as long as it settles above this, and as long as it looks like we're going to make a challenge of this 105.99 area, we're going to keep this on. And if we breach this point here, that would confirm after a higher move low, that would mean a higher move high, which would definitely keep our trade good going into the Friday's expiration, and it also give us a nice signal that this correction may continue going on into next week. So we'll see if it gives us any reason to get into a trade as far as the futures or the cash Forex contracts are concerned, but our options are about to run out of gas, and we do have expiration for the March futures coming up, so it's really tough if we're going to have any plays for that, because the pricing may be a little bit skewed, but just because of the nature of the rollover, which is going on expiration week next week. So now let's go look at the Australian dollar, US dollar. This market, boy, talk about having volatility this week. This one has us just waiting for a signal. I mean, this was Monday here. It set this high and this low, and now look at this market's looking to make new lows again. This is absolutely insanity. You got to have some deep pockets to trade this. I mean, the Australian dollar, US dollar, just doesn't typically have this kind of volatility, and it's been knocking around. We have 63.14 as our lower downside breakout pivot, and 66.88 as our upside breakout pivot. We have a $5.50 range, just from the last, just from this week's trading range to begin with. That's insane. That's a bigger range than we've had in any multiple months over. This is going back on the chart. So, but this also shows you that dollar strength is really coming in. It's raging, and this time I think the dollar is going to come back in a very, very big way over the next few sessions. Just to give you another indicator of how strong the U.S. dollar is, we have the New Zealand dollar, U.S. dollar, which is pretty much a direct reflection of what's going on in the Australian dollar, U.S. dollar, which you can see that they're not all the way on the lows. Mostly because Australia is more tied to China and a lot of the world economy. New Zealand doesn't have quite the issues that Australia does, but it's still riding that same direction. So we are definitely still bearish. Obviously, you can see the market's riding support. I'd be very careful trying to be a bull in this market or trying to pick a point unless you have a very valid sell or buy signal. But otherwise, right now, I would look to sell rallies, and if you're a range trader, also look to sell into highs and then take profits on new move lows as we slide. Now, as far as how wide this trade is going to be, you can see how wide it's been this week. Don't be surprised that we swing around like crazy in this. I mean, the volatility is up in the currencies, so your risk-reward ratios have to be expanded, and if you don't have those kinds of pockets, you either wait until volatility calms down and the environment is suited for your capital, or you just make sure you pick your trades, take only the highest probable ones, and make sure that your risk is limited to the most, and be very capital conservation is very big in this type of environment. You know, there's lots of opportunity, but this is also an opportunity to get blown out. A lot of traders, especially on Monday, that had positions long or short, you can't tell me that they didn't have a tough day on Monday. I don't care how long you've been trading or how little you've been trading or how much money you do or don't have. Odds are most people got destroyed on Monday if they were trading at any side of the market. So take that and be very mindful of that. We always want to err on the way of caution when it comes to the markets. So now let's start to look in another trading zone, North America. Since you can't go to Europe from the United States and you can't go to China, well, you can go to Mexico. And I'll tell you what, this is crazy. This peso, like a balloon underwater, took off when it was at 18.5 just literally 3 weeks ago, and now it was pushing 23 pesos to the dollar. So anyone that's going down to Mexico, even if you're just going down for the weekend, you know you're going to get a cheap flight because nobody's flying. The resorts, I'm sure, will love to have you, even though it's spring break. I'm sure there's a lot of cancellations because of people's fear of the coronavirus, but I think the only coronavirus you're going to get down in Mexico comes in a bottle. So, but anyhow, this is also a market that's not for the faint of heart. I mean, look at the range today. We had a low of, what it was at 21.34 pesos and a high of 22.94, almost 23 pesos to a dollar. I can't imagine what they're looking like at the bank when it comes to the exchange rate. That's for sure. Of course, if they're going off of yesterday, then they would be definitely getting a deal for those that are selling the pesos. So, but yeah, so anyhow, we are a bull in this market. The dollar is very strong, as you can see in every market that we've looked at so far. Now let's go just north of the border from the United States and see what's going on in the U.S. dollar Canada. Now this market, Jesus Christ, every day this week has touched new highs. We have this gap here to fill from Mondays, from Friday to Monday's opening, that little explosion that just lifted this market into newer move highs. I mean, it's pretty crazy. Just the low of the week this week is 135.17 and the high is 137.73. That's just this week, let alone the close of last week was 134.20. So 134.20 up to 137.73. I mean, that is just a ridiculous explosive move. Talking about strength in the U.S. dollar, the U.S. dollar bull is out there. Let's look at the Dixie real quick. You can see that the dollar index, as volatile as it has been, has had a turn for the better as of the last few sessions. 3 days ago, it pulled new lows down at right just above 94.5, and now the dollar index is screaming higher. So let's go back to the Euro-US dollar for one last look to see how our trading signal is manifesting. As we were talking, the trades were reinforced, and here, yep, we're back towards the lows. So we're riding this bear. We're going to see what happens. Remember, we will be getting out of our options trades tomorrow. So far, we're looking really good in all of these. We will see. We'll check out tomorrow and see where the values are. We don't have much left to go in these trades, so if it does seem like there's going to be a turn on the dollar, we may just liquidate them and take the money and run. You know what I mean? So don't remember, pigs get fat and hogs get slaughtered. And right now, I'll tell you what, with the Dow being down, what is it, 1,800 points right now, there's a lot of sheep and pigs scurrying from the thunder. So ride the lightning, and you'll have lamb wrapped in bacon for dinner. All right, so just keep that in mind. And also, if you want to learn how to trade these signals, once again, high probable Japanese candlestick patterns available on Kindle and paperback on Amazon.com. You can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And then you too can have binary options trades and Forex trades and futures options trades. Pick the right ones at the right time to capitalize and get take advantage of trading opportunities as they come. So with that, I want to thank you very much, and always subscribe and like, follow, and share us around the internet on our social media links, as well as check us out at our website, forex-trading-unlocked.com. You have a great trading day, and definitely be mindful of this volatility and use caution and pick your trades